Fellow traders, 'tis I, the Rumpled One, coming to you on Wednesday, September the 17th. The year's 2025. Let's talk trading. Getting ready to trade FOMC. These videos are for educational purposes only. Your results may differ from mine. And it's really important when you're trading FOMC, is when you're trading anything, to make sure you have your risk management in place. You do not want to lose more than you're willing to lose on any one single trade or during any one trading session. Now, what are we going to do to trade this? Well, what we need to do is we need to take a look at the charts across the board. So you can see here weekly, we're just 8 pips off the high, the weekly high right now. We look at the monthly, you can see we're above last month's candle. You look at the day, we're in the wick zone of the previous day. So FOMC, we should expect quite the movement if they change anything. And if anything, the pound should go up, because if they move the numbers and raise interest or lower interest rates, then the dollar's not going to be as attractive. So you can see here for the year, we're 125 pips off the high. We had an inside bar 3 days ago. We're well above that. So we just really need to take a look at where is price. We're in the upper wick zone. So we've got a little over half an hour till the news comes out. So 36, call it 72, hits that. That's a long trigger. It drops down through, say, 47. That's a short trigger, because price does not like staying in the wick zone. As you can see here, it does not like staying in the wick zone. So we'd have about an 8 pip move to the upside would put us in, and about a 17 pip move from right here to the downside would put us in the trade. Note, you get in these trades, what should you expect? Well, if we hit that ATR, then you probably want to start thinking about taking profit. So 36.88. So from about that 36.70 line, you might be able to make 15, 20 pips of profit. Might be able to make more, but you don't want to be greedy. You don't want to get caught, and price can move really quickly. So you might even want to set your TP ahead of time and be ready to click the button if it doesn't quite get there and it looks like it's stalling. Because I had a couple traders, they really want to watch Walmall and I. We can put up a screen, go and be live, and call out the trades as we see them. But the thing is, we really don't want people trying to piggyback the trades, because we're not going to be there every day. So you might learn through observation and just to hear what we're thinking as we getting ready to enter a trade. But the thing is, as I mentioned, once you enter a trade, now the game is to minimize risk. Make sure you don't lose more than you're willing to lose. That's all trading is once you enter. It doesn't matter. The reason you enter just doesn't matter at all. What matters is what you do. I've been shorting, and price has been going against me, and then it comes back and it gets me out. So right here we just have a 3-ball. Now I would probably be thinking I might want to go short, but right now we've only got 29 minutes to the announcement. So we're just going to sit here and watch and see what happens. And usually the candle before the announcement, that 1 minute candle before, will go in the opposite direction. Does it always work? No, it doesn't. But It seems to work more often than not. So I might take that chance trade. If price is moving up before the announcement, I might risk a short. If is moving down before the announcement, I think I will definitely go long. But we'll just have to wait and see what happens. That's all we can do, is just wait and see. But that's really the what to look at to trade the FOMC. I mean, you can definitely, look for flip-flop boxes coming the other way. You can look, I like to use indicator 2. And one of the things we've been doing is indicator 2, the M5. And what I did was I updated the TRO mid dots. So you can see back here how you have these straight lines, but then you see here it gets more squiggly. But that's because of the way MT4 works. Once I put it on the chart, I can then plot it on a minute by minute basis and not go back and recalculate, as somebody might call it repaint. It's just the way MT4 is written and most of the code's written. It'll go back and recalculate. And this way, it only calculates the current. It doesn't go backwards. So once that plot is set, it stays put. And so here, something that I've looked at, and you could call it hindsight, but when price starts to get below the indicator 2 on the M5 level, and you see right here price is crossed, the M1 indicator 2 is crossed below the M5 indicator 2, that's when you can really start to put your shorts on. And then ditto here for longs. And it just seems to be something that can keep you out of trouble. So for example here, you may have been buying down here. You see it hit 60 and it kept bouncing. You might take that chance. But you see here, once you get the crossover of price and then you get the crossover of indicator 2s, it's usually good to go. And so you can see here, you could have picked up, maybe 3 or 4 pips off of this level here. And the thing is, depending on how you want to trade, you can maybe stay in the trade for a good amount of time. Now, right now, the day is kind of interesting in the sense that, now let's see, where do I have it? I guess I'm going to have to, let's just switch this over to the daily. You can see here, we don't even quite have 40 pips of range on the day. And if you go back here, 9 days ago, we had a 42 pip range day. And we had 14 days ago, we had a 47, and 12, we had 50. So you can see here, just don't have much range. So I would expect price to probably make a new high. I would expect it probably to, if it hits the 3750 level, possibly. That might be a little on the high side. We're at 3666. So we'll probably hit 3675. If we hit 3675, chances are we'll hit 37. That's what I would target. So let's see here. Time frames. Let's put this on the 30-minute. So once again, Oh. So looking here, chances are we'll hit 70, 75, and then target 37. Now, if we take a look at the daily, we have to scrunch that up a bit. You can see here we have a nice return bar. So there's a chance we might even see 37.50. But that's what I would be looking for. Those are the things. So look for price to maybe stall. And if it can pop through here, we might even see 38. Maybe today, maybe by the end of the week. I don't know. But these are just the things that you look for when trading. Now, also to the downside, if it crosses at 37.50 on a break, you might even look to see 3,600 because it's a red news day. So anything could happen. So right now we're pretty much in watch and wait mode. And you can see here these 3 balls got put in. And we're just a few pips off of yesterday's high. Once again, right here in that upper wick zone. We've already taken out the daily pivot, taken out the weekly, we've taken out the monthly. Bambino Flex indicator said to go long. Price near the pivot was a long trigger from the pivot trading plan. So those paid off. So once again, just, having a plan, saying what you're going to do, and not monkeying with the plan while you're trading. And that, I know, sometimes is easier said than done. And so let's see some other levels just to be aware of. R2's at 37.14.6, call it 37.15. We've got weekly R3 just below R2. We've got weekly R4 pretty much at the same level as the daily R3, which is 37.57. We're 89 pips away from that. And that could be doable with this news, with R4 coming in at 37.91. We've got monthly R1 at 36.85 and monthly R2 at 38.66. So these are levels that other traders may be looking for, anticipating. So, but you have to trade what you see. It's like we're trying to make a new high here. Yep. We're in that upper wick zone. Notice here on the buy zone, popped out. Daily opens down at 42, which is the launch pad. And so you can see here the launch pad worked once again. So, fellow traders, I hope you get to watch this. And if you're trading FOMC, just remember to make sure you have your risk management in place, because these videos are for educational purposes only and your results may differ from mine. And that's because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.